Re-tackling the big question on everyone's mind. Will the Iraqi dinar finally break free from the US dollar in 2025? For years, this has been a hot topic among economists and investors. Now, with major reforms and new trade deals, the buzz is louder than ever. Is Iraq really preparing to give the dinar more independence? Let's break it down. First, why is the dinar pegged to the dollar in the first place? It's all about stability. Tying a currency to the world's strongest reserve currency helps control inflation, stabilize trade, and maintain predictable prices. Think of it as an anchor in a stormy sea, but there's a downside. With this peg, Iraq can't fully control its own monetary policy. The dinar's value is tied to the US financial system, not just Iraq's economic health. That's why many are hoping 2025 will be the year for a change. So, what is Iraq doing to gain more financial independence? Over the last couple of years, we've seen some significant moves. They're upgrading their banking networks with new electronic platforms to stop smuggling and illegal dollar outflows. The Central Bank of Iraq has gotten much stricter with its currency auctions and foreign transfers, pushing for compliance with global rules. Plus, Iraq is now signing trade deals with countries like China and Turkey to settle imports in their own local currencies, not just dollars. All these signs point toward a long-term goal of relying less on the dollar. But what does breaking free from the dollar actually mean? It's not an all-or-nothing situation. One option is a full float, where the dinar trades freely on global markets. This is high risk and could lead to major volatility. A more likely scenario is a managed float, where the central bank lets the dinar move within a controlled range, offering more flexibility with less risk. Another popular idea is tying the dinar to a basket of currencies, like the UAE and Kuwait do, for greater stability. Before any of this happens, Iraq might revalue the dinar upward after strengthening its economy. Right now, a managed float or a currency basket seems much more realistic than a sudden, complete break. Of course, to make any of this happen, Iraq has a checklist to complete. It needs stronger, more diversified foreign currency reserves, not just US dollars. It must maintain stable inflation and prove it has strong monetary controls. A fully modernized electronic banking system is essential to support a higher value currency. And critically, Iraq needs to tackle corruption and the black market, which have historically weakened the dinar. The good news is, progress is being made on all these fronts, which is why 2025 feels like a potential turning point. Global politics also play a huge role. The US still keeps a close eye on Iraq's dollar flows to prevent misuse. If Iraq tries to detach too quickly, it could face restrictions or even sanctions. At the same time, rising powers like China are encouraging Iraq to move away from the dollar. So, Iraq is caught in a balancing act between American financial oversight and new economic opportunities in the East. So, will 2025 be the breakthrough year? Here's a realistic look. On one hand, new non-dollar trade deals and the push for digital banking are very promising. The global trend of de-dollarization is also gaining speed. But on the other hand, Iraq still relies heavily on US financial approval. The economy is still mostly dependent on oil, and the banking system needs more work. In conclusion, Iraq probably won't completely break free from the dollar in 2025. However, we can expect major steps toward independence. This could mean reducing dollar dependency, shifting to regional currencies for trade, or even adopting that currency basket we talked about. The change will almost certainly be slow and carefully controlled, not a sudden shock to the system. If Iraq does manage to shift away from the dollar in a stable way, the rewards could be huge. more control over its own economy, stronger national sovereignty, and a potential appreciation of the dinar. But if it's managed poorly, it could lead to inflation and instability. The trend is clear. Iraq is steadily moving toward greater control over its currency. The big question is how wisely it navigates the path ahead. Will the Iraqi dinar finally break free from the US dollar? That's the million-dollar question, or maybe I should say, the million-dinar question that has investors and analysts buzzing as we head toward 2025. For years, the dinar has been tied to the dollar, but now with major reforms sweeping through Iraq's financial system, many are wondering if a big change is on the horizon. Iraq is modernizing its banks, tightening currency controls, and even trading with other countries in their own currencies. So, is Iraq gearing up to let the dinar stand on its own 2 feet? To figure that out, we need to look at why the dollar peg exists in the first place, what Iraq is doing to change things, and what it would actually take to make a break. First off, why has the dinar been stuck to the dollar for so long? Simple, stability. Pegging a currency to the world's most trusted reserve currency, the US dollar, gives countries like Iraq a predictable exchange rate, protection from wild inflation, and stability in global trade. It makes importing goods easier because prices are consistent. But this stability comes at a cost. With the dinar tied to the dollar, Iraq has very little control over its own monetary policy. If the dollar gets stronger, Iraq feels it. If it gets weaker, Iraq feels that too. This is exactly why so many people think Iraq is looking for more independence, especially as its economy evolves. And the signs are definitely there. In the past few years, Iraq has been making some serious moves. They're modernizing their entire banking system with new digital platforms. This helps reduce fraud and makes transactions more transparent. The Central Bank of Iraq has also put stricter rules on currency auctions and foreign money transfers, cracking down on the illegal use of dollars. What's really interesting is that Iraq is now making trade deals with countries like China, Turkey, and India, agreeing to pay in local currencies instead of just using dollars. As Iraq shifts more toward digital systems, it becomes less dependent on physical US cash. All these steps suggest Iraq is laying the groundwork for a more flexible financial future, even if it doesn't drop the dollar peg overnight. So, what does it mean to break free from the dollar? It's not as simple as just cutting the cord. There are a few different paths Iraq could take. One option is a free float, where the market decides the dinar's value. This is super risky and could lead to extreme volatility. A much safer route is a managed float, where the central bank allows the dinar to move within a controlled range. This offers more predictability and a gradual path to independence. Another popular idea is pegging the dinar to a basket of currencies, not just the dollar. This will spread the risk and provide even more stability. Most experts agree that a sudden free float is unlikely. A managed float or a currency basket makes way more sense. But before any of that can happen, Iraq has a lot of work to do. It can't just flip a switch. It needs to build a rock-solid economic foundation. This means having larger, more diverse foreign reserves, not just a pile of dollars. It needs to prove it can control inflation and keep the economy steady on its own. Strong digital banking and financial transparency are non-negotiable. Without them, independent currency would be a disaster. And, of course, Iraq has to tackle corruption and the black market for dollars, which constantly weaken the dinar. Finally, the more international trade partners Iraq has, the less it will have to rely on the dollar. It's a slow process, but definitely not an impossible one. we also can't ignore global politics. Iraq's relationship with the United States plays a huge role here. The U.S. closely monitors how dollars move in and out of Iraq, so any sudden change could trigger restrictions or penalties. At the same time, countries like China are encouraging Iraq to move away from the dollar, offering energy deals and new trade partnerships. Iraq is basically walking a tightrope, balancing U.S. financial oversight with new opportunities in Asia. This makes its currency strategy incredibly complex. So, could 2025 be the year? On the one hand, the momentum is there. Iraq is expanding trade beyond the dollar, the government is pushing for transparency, and digital banking is improving. On the other hand, major challenges remain. The economy is still heavily dependent on oil, and smuggling networks are a real threat. The most likely outcome? Iraq probably won't completely ditch the dollar in 2025, but it could take huge steps to reduce its dependence. We might see a controlled adjustment of the exchange rate or a shift to a hybrid currency peg. If Iraq does successfully begin to move away from the dollar, what could happen? The potential benefits are huge. More control over its own money, a stronger national currency, and maybe even a gradual appreciation in the dinar's value. But the risks are real too. A poorly timed transition could lead to inflation or market instability. A successful move requires careful planning, balance, and strong international cooperation. Ultimately, the question of whether the Iraqi dinar will break from the dollar in 2025 is complicated. A full, dramatic split is unlikely to happen in a single year. Instead, what we're likely to see is a gradual but significant shift. Think less dollar usage, more diverse trade, and a stronger, more independent monetary policy. So, 2025 may not be the finish line, but it could very well be the start of an exciting new era for the Iraqi dinar. Will the Iraqi dinar finally break free from the US dollar? As 2025 approaches, speculation is heating up. With new trade deals, banking reforms, and tighter controls on dollar flows, many believe Iraq is on the verge of a major monetary shift. But is Iraq truly ready to unpeg the dinar? Or are these just small steps toward a distant goal? To figure this out, we need to dive into the history, the changes happening right now, and the huge challenges that lie ahead. For decades, Iraq's economy has been anchored to the US dollar. Pegging the dinar to the dollar brought stability, helping to control inflation and making international trade predictable. But there's a big downside. The dinar has no independence. When the US dollar fluctuates, so does the dinar, no matter how Iraq's own economy is performing. This dependency is exactly why the conversation about breaking away has gotten so loud. So, what is Iraq actually doing to gain more control? We're seeing some serious moves. First, they're remodernizing their banking system with digital tools to track international money transfers and cut down on illegal transactions. The Central Bank of Iraq has also rolled out stricter rules for currency sales, requiring more documentation and ensuring banks comply. Perhaps most importantly, Iraq is now trading with countries like China, Iran, and Turkey using their own local currencies, bypassing the dollar altogether. As they shift digital platforms, their reliance on physical shipments of dollars from the U.S. Federal Reserve is also shrinking. All these signs point to one thing: Iraq wants a more flexible currency. Now, what does breaking away from the dollar actually mean? It's not just about letting the dinar float freely on the market, which would be extremely risky and volatile. Iraq has a few options. They could try a managed float, where the central bank lets the dinar move within a limited range. Another popular idea is a multiple currency peg, linking the dinar to a basket of currencies, not just the dollar. This would make it more resilient to U.S. policy changes. A gradual revaluation is also on the table, where the dinar's value is adjusted upward before any big changes to the peg system are made. A managed float or a currency basket seems way more likely than a sudden full float. But before any of this can happen, Iraq has a lot of work to do. It needs to build strong, diversified foreign reserves, not just dollars. Inflation must be low and stable. The country's banking infrastructure needs a major upgrade to handle currency movements smoothly. And critically, Iraq has to clamp down on the black market and corruption, which undermine confidence in the dinar. The more international trading partners it can secure, the less it will feel the pressure to rely on the dollar. These are the essential pillars for any successful monetary reform. International politics also play a massive role. The United States keeps a close eye on how its dollars are used in Iraq to prevent misuse. If Iraq moves away too quickly, it could face pressure or even sanctions. At the same time, countries like China are encouraging Iraq to reduce its dollar dependency. This means Iraq is walking a tightrope, trying to balance its relationship with the U.S. while exploring new financial alliances in the East. So, is 2025 the year for a big change? There are positive signs. Iraq is using other currencies more, new regulations are in place, and the global trend of de-dollarization is gaining momentum. But the challenges are still huge. The economy is deeply tied to oil prices. The banking system still needs modernization, and the U.S. still holds significant influence. A full unpegging in 2025 seems unlikely. What's more probable is that we'll see a gradual reduction in dollar dependency, maybe a move toward a basket peg system, and more flexibility in the exchange rate. If Iraq navigates this transition wisely, the potential rewards are huge. Greater control over its own economy, a weaker black market, and a stronger national identity. But a misstep could lead to instability, inflation, and economic turbulence. In the end, while a dramatic break in 2025 isn't guaranteed, it's clear Iraq is on a path toward greater financial independence. 2025 might just be the year that this long, gradual transition truly begins. As 2025 gets closer, the debate around Iraq's currency is getting louder than ever. Is Iraq preparing to give the Iraqi dinar more freedom from the US dollar? The country is tightening financial rules, rebuilding its banks, and forging new global ties. All these moves hint at a potential shift. But is the dinar really ready for independence? And what would that even mean for Iraq's economy? Let's dive in. For a long time, Iraq has tied the value of its dinar to the US dollar. This strategy, known as a peg, helps keep the economy steady. It creates predictable exchange rates, stabilizes global trade, and controls inflation. However, this dependency comes at a cost. Iraq can't adjust its currency based on its own economic needs. It has to follow the dollar's ups and downs. If the dollar gets stronger, so does the dinar. If the dollar weakens, the dinar falls right along with it. This is why many experts believe Iraq is looking for a more independent path. And it seems they're not just thinking about it. Over the past few years, Iraq has been quietly making some big moves. The government has adopted advanced digital systems to track money transfers and block illegal dollar use. The Central Bank of Iraq has also introduced much stricter rules for its currency auctions. On top of that, Iraq is now trading with some countries using their local currencies, instead of always relying on the US dollar. These actions don't mean a sudden break from the dollar's coming, but they show a clear and steady march toward greater financial control. So, what would it actually mean for the dinar to separate from the dollar? It's not as simple as just letting it go. Iraq has several options. One is a free-floating dinar, where the market decides its value. This is extremely risky and could lead to major instability. A safer choice is a managed float, where the dinar can move within limits controlled by the central bank. Another option is to peg the dinar to a basket of currencies, like the euro and yuan, reducing dependence on any single economy. Most economists think Iraq will likely choose a managed float or a basket peg, rather than a risky free-for-all. But before any of this can happen, Iraq has some serious homework to do. It needs to build up its foreign reserves with more than just dollars. We're talking gold, euros, yuan, and other assets. Inflation must be stable, and the banking system needs to be fully modernized and digital. Critically, Iraq must also eliminate the illegal dollar smuggling and black market networks that weaken the dinar's stability. While progress is being made on all these fronts, there's still a ways to go. We also can't ignore global politics. The U.S. government keeps a close watch on how dollars are used in Iraq to prevent any misuse. Any sudden move by Iraq could risk financial pressure or even restrictions on its access to dollars. At the same time, countries like China are encouraging Iraq to trade using their own currencies, part of a global trend toward de-dollarization. This puts Iraq in a very delicate position, caught between American financial rules and new opportunities in the East. So, is 2025 the big turning point? While there are positive signs, a complete break from the dollar seems unlikely. Iraq's heavy reliance on U.S. approval, its oil-dependent economy, and the active black market are major hurdles. What's more probable is a gradual, controlled, and very cautious shift away from the dollar. If Iraq does take this slow and steady approach, what could happen? The potential benefits are huge. Stronger national financial independence, more control over its own economy, and a potential rise in the dinar's value over time. It could also boost credibility with global investors. But there are risks too, like temporary inflation or economic instability during the transition. In the end, will the Iraqi dinar completely break its dependency on the US dollar in 2025? The answer is most likely no, not in one dramatic move. But Iraq is clearly steering its ship in a new direction. The focus is on less dollar use, more transparency, and broader trade partnerships. So, while 2025 might not be the year of full independence, it could very well be the start of a historic transformation toward a more autonomous and stronger Iraqi dinar. Is 2025 the year the Iraqi dinar finally breaks free from the US dollar? This is a question that's been buzzing in financial circles for a while now, and the answer is more complex than you might think. For decades, Iraq's economy has been deeply tied to the dollar, a dependency that began after 2003 as a way to stabilize the country. The US dollar became the anchor, with regular auctions helping to control inflation and keep the financial system from collapsing. But this safety net came at a cost. The dinar's value became linked to U.S. regulations. International payments needed to pass through American systems, and whenever dollars became scarce, prices for everyday goods in Iraq would shoot up. Many Iraqis felt that their country's economic destiny was not fully in their own hands. So what's changing in 2025? A lot, actually. We're seeing a combination of factors that are pushing Iraq towards greater monetary independence. First, there are new trade agreements in the works. Iraq is in talks with major partners like China, Russia, Turkey, and India to trade using local currencies like the dinar or the yuan instead of the dollar. Imagine buying and selling goods without needing to convert to dollars first. This move alone could significantly reduce Iraq's exposure to dollar fluctuations and give it more control over its international trade. At the same time, the United States has increased its scrutiny over how dollars flow through Iraqi banks. While the goal is to stop illegal money transfers, it's had the side effect of slowing down legitimate business transactions. This has pushed Iraqi leaders to actively look for alternatives, making non-dollar trade not just a good idea but a necessary one. On the home front, Iraq is undergoing a major digital revolution. The central bank is aggressively promoting digital payments, e-wallets, and modern banking infrastructure. When more transactions happen digitally in diners, it reduces the reliance on physical dollars for daily commerce. This modernization is a critical building block for a stronger, more independent national currency. But let's be realistic. Breaking free doesn't mean the dollar will vanish from Iraq overnight. The goal isn't to eliminate it entirely but to reduce the dependency. This means allowing more trade to happen directly in diners, reducing the need for Washington's approval on foreign transfers, and boosting the dinar's acceptance across the region. For this transition to succeed, Iraq needs patience, stability, and the trust of its international partners. The dinar needs to be in higher demand, backed by strong financial reserves and consistent economic policies. Some experts believe that by strengthening ties with Asia and the Middle East, Iraq can gradually build this new economic reality. Others are more cautious, warning that a real shift could take many years, not just one. So what does all this mean for the average person in Iraq? If the dinar becomes more independent, it could lead to less price volatility for imported goods, greater confidence in the local currency, and better control over inflation. This could create a more stable environment for local businesses to grow and thrive. However, the transition has to be managed very carefully. Moving too fast could create chaos in the currency markets, while moving too slowly might not bring the desired changes. Will 2025 be the big year? It might not be the year the dinar completely separates from the dollar, but it is shaping up to be the year Iraq takes its biggest leap yet toward economic sovereignty. With new trade deals, regional partnerships, and a modernizing financial system, the journey has clearly begun. The real question is how far and how fast Iraq will go. The world will be watching closely. Have you heard the buzz about Iraq and the US dollar? For years, people have been wondering if the Iraqi dinar could stand on its own. Now, as 2025 gets closer, that question is more relevant than ever. Big changes in economic policy, new global rules, and shifting trade partnerships are all pointing toward a future where the dinar plays a much bigger role. It seems Iraq is finally laying the groundwork to break free from the dollar's dominance. So, how did Iraq get so tied to the dollar in the first place? After the instability of the early 2000s, the US dollar was brought in as a way to stabilize the economy. The government used dollar auctions to control currency flow and keep inflation in check. But this created a long-term problem. Iraq's entire financial system became dependent on US approval. International trade was almost entirely done in dollars, and whenever there was a shortage, prices for everyday goods would shoot up. The dinar's value was essentially trapped by systems outside of Iraq's control. But things are starting to change, and 2025 looks like it could be a major turning point. Let's break down what's happening. First, Iraq is actively making deals with major trading partners like China, Iran, Turkey, and India to use their own local currencies instead of the dollar. This is a huge strategic shift. It means Iraq won't have to rely on the US banking system for every transaction, giving it more control over import costs and strengthening the dinar's position on the world stage. Second, the United States has recently tightened its watch on how dollars move through Iraqi banks. The goal was to stop misuse, but it also made it harder for businesses and people in Iraq to get the dollars they needed. This pressure has actually pushed the Iraqi government to speed up its search for alternatives, like using the Chinese yuan or setting up direct dinar-based trade agreements. It's a classic case of necessity being the mother of invention. Third, Iraq is undergoing a massive digital transformation. The government is pushing for more digital banking, electronic payments, and modern financial tracking systems. Why does this matter? Because a modern, transparent banking system reduces the need for physical cash, especially dollars. When people trust their local currency and can use it easily for everything from groceries to online shopping, the dollar naturally becomes less important. So, is a complete split from the dollar even possible? Realistically, the goal isn't a total divorce. It's about reducing dependency. Think of it as Iraq wanting to have more financial independence, where the dinar is strong enough to handle domestic transactions and a good portion of international trade. For this to work, a few things need to fall into place. Inflation must be stable. The country needs strong foreign reserves. Economic policies must be consistent. And international partners need to have confidence in the dinar. Some experts are optimistic, believing Iraq could slash its dollar usage in just a few years. Others are more cautious, saying it will be a slow and steady process. What would this mean for the average Iraqi citizen? A more independent and stable dinar could lead to more predictable prices for goods and services. It would mean less worry about market swings caused by dollar shortages and more trust in local banks. Ultimately, it could make it easier for people to get loans and for the economy to grow from within. If managed correctly, these changes could bring real long-term benefits to daily life. So, is 2025 the year it all happens? While a complete break from the dollar in just 12 months is unlikely, 2025 is shaping up to be a decisive year. The combination of new trade deals, a modernizing financial system, and changing global dynamics is creating a powerful momentum. Iraq is actively working to build a stronger, more independent monetary future. The journey will be challenging, but the first major steps are already being taken. We'll be watching closely to see how this historic shift unfolds.